Hello everyone. Today we have Jagan, and Jagan is a funded trader with us. He's been trading 100K account, and he has taken around $4,000 with us. So Jagan, how are you?
I'm good. I'm good actually. Hey guys.
Yeah. Thank you so much for joining this podcast with us. I hope the traders who are watching this on YouTube, they're gonna learn a lot of things from you. So first and foremost, can you please introduce yourself? How long you have been trading, and since when
Mhm.
you got to know about this trading industry, and then how did you got introduced to this platform and in this industry?
Got it. So actually, guys, like my name is Jagan. Firstly, so yes, I have been in this industry for like the past 8 years. You can say that. So I started trading back in like 2017, 2018. That was the time. Back then, I was in college. So it was just like I just wanted some pocket money, and I saw one of my friends trading and making that money. So like I was like, how is he making that? How is he doing that? And that's how he introduced me to the share market or stock market concept at the moment. That back then. And after that I kind of got interested in it, and I put like something like 10,000 rupees, and within 2 to 3 days I was able to get 2,000 rupees, and I was like, oh, that's easy. Like it's too easy, like it's too easy for me to make money.
Mhm.
So I just fell for the dream, and and then I lost money as well. I lost like a huge lot of amount because I followed a lot of YouTube strategies, like you know those things, right? So
Yeah.
initially, like I don't know, I didn't know any strategies at first. I was like, okay, you buy, and if the price goes up, you sell, you make money. I made money. So that was the initial, way I made money. And then I lost a huge amount of money because I didn't know anything about risk management. I didn't have any strategy. I was purely trading based on emotion back then. And then when I lost money, I had the realization that like you need to learn this industry if you want to make money. Like initially, the market's gonna give you money, and it's gonna create that hype inside you, right? And after that, it's going to take money from you, so you need to learn about this industry. So that's how I went on to YouTube to try out different strategies. And that's where I initially learned the basic price action, you can say that, the patterns, the candlesticks. So all those things I learned from YouTube. And we can say that it was not that helpful because like they just kind of gave me the basics, but it was not that good because I was not able to make money with it, because like I was able to see all those patterns and all those things play in the market if you check the history. But after that, you cannot see it, right? Like when it's actually
Right.
happening live, you won't be able to take the decision. You're like okay, like I went long, but it went against me. Like how is it possible? So when
Mhm.
it's actually playing out, you won't be able to make money. So like then I realized that okay, it's not just this. You need to learn about it. You need to learn the fundamentals. You need to learn actual TAs. And that's how I found certain YouTubers trading without any indicators. So back then I thought that indicator was the thing. You need to have an indicator to make money. So that's how I got into this. And then I saw one guy who was trading without an indicator. He only had volume over there. I was like, okay, how is this guy making money with only one indicator? Like how is volume helping him? And then
Mhm.
I kind of he I got to know that he was giving score courses. And then I DM'd him, and it was something like $800 back then, back in 2018, you can say that. So I gave
Mhm.
him that money, and I was learning it. So that was the start of initial that was the initial thing. Okay, about
Okay.
and he taught me about liquidities, ICT, all those things. So and that's how I got to know about ICT as well. So initially ICT was kind of good for me. There's some of the strategies that I was using kind of worked, from ICT. But after that, it was not that interesting, you can say that, because like I kept on losing money because my risk management was not that good. Like I was risking like 5 to 6% a trade. So if you lose like 5 trades in a row, that's about 60%. So that was the kind of risk reward that I was following, because I had this
Okay.
hype of or like wantingness to make money fast. So because of that, I
Mhm.
was risking a huge lot of money, and then I made some money and I lost it all as well. And then after like 2 years or something like that, you can say that after 2 years, I learned about risk management, all those things. You should only risk like 1 or 2% a trade. You should manage your account. You should manage your psychology, all those things. And that's how I, started. That's how my trading journey started. And after that, whatever profits I made from the forex industry, I put it into crypto, and that was when the crypto boom happened back in 2021. You know
Okay.
that, right? Like
Yeah. Yeah.
literally every single token that you invest, it's gonna go to that. It's gonna
Yeah.
go at least 10x. It was like that.
The
So
entire
like
market was going up and up.
exactly, like that was like it's money. Back then it was too easy to make money. Like you buy a
Mhm.
token, it goes up 10x. It's easy. You can literally invest in any random token, and it's gonna go up at least like 2x. So that kind of hooked me to this industry of trading. And yeah, after that I focused on crypto. I was focusing on forex, and then the money started coming in. And yes, after that, I have you heard of crypto banter?
Which one?
Crypto banter. They were like a YouTube channel. That was a YouTube channel.
No, no, no. I haven't heard them.
So like since I was in the crypto industry, since I was focusing more in the
Yeah, yeah.
crypto industry, because like it was kind of easy to make money back then. So I got to know about
Mm-hmm.
these YouTubers. I got to know about a lot of these YouTubers because I wanted to know about the industry.
Okay.
I wanted to know what
Mm-hmm.
crypto is. And then I
Okay.
focused on the crypto, and I joined their community. And later they took me as a community manager as well as a mentor
Oh,
to teach some of their students. And that's how my trading journey started. And yeah, and then I think I mentored a couple of famous YouTubers in the crypto industry as well. In
damn,
the end,
amazing, amazing. So, like, how did you started trading? Like, it was Indian market or directly into forex or crypto?
I started in the Indian market, but like I was not actually going for full features. I was like buying stocks,
Mm-hmm.
and it was going up 20% in like within like 2 to 3 weeks, and I was making money with it. So that was the thing. So yeah, and some stocks actually went up 20% in a day as well. So I was like, oh, that's so easy. So that was the thing. And uh, and then I switched to forex because my friend, the friend which introduced me to this whole thing, told me that forex is way better than crypto. I mean, not crypto, like stocks, because you can literally make a huge lot of money in forex because they provide a huge leverage as well. Because in the Indian markets, right, they don't provide leverage or anything. So that's how he introduced me to this leverage concept. Like I was like, okay,
Mm-hmm.
they will give you money to take higher position so that you can make more money. So that kind of got me into this forex industry. And yeah, initially I lost a lot of money, then I made it back as well. Whatever I lost, I made it back from the crypto. Okay, like I made some profits from forex, but mostly it was
Okay.
from crypto because of the bull run which happened in 2021. Yes, and right now the strategy that I'm following is a strategy that I created by myself. It's kind of like a mixture of ICT as well as closing price. Like, have you heard of SNR, MSNR, Malaysian SNR, that one?
No, no, I need to learn from you now.
Okay, so like it's kind of like a closing price strategy. Like you need to create a bias. Like this, right? It's kind of simple. You don't
Yeah,
need to complicate
yeah.
yourself because you know that by the end of the day, you're trying to predict what that daily
Mm-hmm.
candle can be, or that weekly candle can be, or that
Okay.
monthly candle can be, right? You're just trying to
Mm-hmm.
predict that color, the color of that candle, like whether it can be a bullish candle or whether it can be a bearish candle. You create that bias initially. You have to create that bias initially. So after that, you trade based on that bias in the lower time frames. So I was trying to create that bias initially of what the day can do, and then I was trading that in the lower time frames, maybe in the 1 hour or 5 minutes. So that's the kind of
So
strategy.
it's like
And for point of interest,
CRT.
yeah.
It's like CRT
No,
model.
no,
I
no,
think
no,
I've heard of that. Okay.
no. CRT is like kinda. You can say that kinda, but yes,
Mhm.
yeah.
Okay, so I'm very interested to know that what is the strategy you are using? How did you refine in these 8 years? So can we just check your trading view and then you can explain to us
Sure,
like what is
sure,
your
sure.
strategy and
Sure.
how you are mixing ICT and okay.
So like from ICT, I only check the liquidity concepts mainly, like whether like whether the liquidity is there over there. Can you see my screen? You can, right? My trading view.
Yeah, yeah. I can see your screen.
So like the bias concept, you know that, right? Like if like the order flow, right? The flow of orders. So if
Mm-hmm.
you are in a trending market, like okay, okay, that's another thing. You know how fundamentals work, right?
Right.
You do know why the market is moving sideways for the past 3 months, right? It's because of the war, as well as it's because of the inflation. All those things are happening, right? Right?
Yeah, yeah,
Dollar getting
correct,
strong.
correct.
So you check the correlation chart. Like that's the first thing that I do. I check the correlation of whether dollar can get weak or strong. All those things. So let me just take my
Okay.
screen and DXY. That's DXY. Okay. This is 1 minute. But that's not okay. That shouldn't be the case. So yes. So initially I will check the DXY. That's the first thing. Okay. Whether dollar can gain
Mm-hmm.
strength or lose strength. I just check the correlation because you know that if a dollar is at a support, you can see this, right? January 23rd.
Mm-hmm.
You can
Yeah.
just cross check this as well. Like this, that was the high of gold. People think that you cannot predict the high of gold as well as high of the stocks. It is literally possible if you check the DXY, because DXY reaching a key level, that means gold as well as the stock markets will reverse, and you can literally see that. And the key level in DXY was something like a 6 month or a 3 month level. I think I marked it over there. One moment, let me just check it. 1 month, not 1 month. I think it was 1 month. So yeah, closing price, you literally mark all those things in the line chart. Okay, it's not candle chart. You literally mark those things in the line chart. So can you see this pointy tip over there? This,
Okay.
you can see this, right?
Yeah, I can
Did
see
it
that.
tap? Did
Yeah,
it
yeah, I can
tap?
see.
No, right? It's not tapped, right?
Right.
Look,
Okay.
tapped. It's tapped. It's like that. It's like the market moves
Okay.
by tapping onto closing prices. That's how the market moves mainly.
Mm-hmm.
So I purely follow
Mm-hmm.
this method. Okay, so closing prices, and you can see the date as well. I mean, you can see that the closing price got triggered on 13th of January, right? 23rd of January, 27th. You can see that, right?
Okay.
That was kind of
Mm-hmm.
like the top of gold as well. From there onwards, you can see dollar pumping, and gold has been dropping from there onwards. And yeah, at the moment, I feel like DXY is gonna go up. So yes, I create a bias based on this. Okay, whether DXY can go up or DXY can go down. So if DXY goes up, then there is a higher possibility for the gold to drop. You know that, right? Because if dollar gains
Right.
strength, then gold is going to drop. So based on that, I
Yeah, they are
create a
inversely
bias.
proportional. Mm-hmm.
Exactly, they're inversely proportional, correlated. So because of that, I create a bias. So and you can see that like the market was actually bearish for gold, and it was kind of bullish for DXY as well. And then the next thing is I try to check the overall bias, whether gold can be bearish or gold can be bullish short term. And that purely depends on the news which comes in the markets. And you know how Forex Factory works, right?
Yeah.
So like let me just take the calendar, and you can see that. So for the past 3 days, you can see that gold was dropping, right? Do you know the reason?
Mm-hmm.
Like the PMI came up. I use a manufacturing PMI, and that was kind of bullish for dollar. You can see that 54 above 50 is actually bullish. Okay, which means dollar is gonna gain strength. The dollar is gonna gain more strength, which means gold will drop. And you can see that from Monday onwards, you can see gold dropping. So until another financial news comes into the market, you can expect gold to be bearish. Okay, and today we have a news as well. And the main news for the whole week is NFP. You know that, right? Friday.
Right.
So
Right.
the
Right.
market is gonna. We can confirm whether the market's gonna be bullish short term or bearish short term based on that news. Like NFP. So yeah, so
Mm-hmm.
until NFP, I'm expecting the market to drop. So hopefully I'm expecting gold to drop to somewhere near this key level, 4,251. That's basically a closing price as well. You can see that. So that was
Okay.
the key level that I'm expecting gold to drop, and from there I'm expecting gold to pump, and that totally depends on this week's news as well. Okay. Okay, so I have a
Okay.
bias now. I have a weekly bias which states that gold will drop to these levels. I know that. So on the lower time
Mm-hmm.
frame, I don't need to long. I only need to consider shorting, and I just go to the daily time frame. I create a daily bias initially, and you can see that over here also the concept of closing price works pretty well. You can see that pointy tip, right?
Right.
It's reacting. You don't see price closing above it. So after getting to this closing price, I check a lower time frame confirmation. I can just go to the daily 1 hour time frame or 5 minute time frame, and I need to see a structure shift over there with volume. Okay.
Okay.
Okay. So I need to see a
Okay.
structure shift with volume, as well as I need to see the order flow being getting bearish as well. And that kind of helps me, understand whether, like, say for example, over here, you can see this, right? The order flow was
Mm-hmm.
bullish. And the moment the candle closed below this 1 hour candle low, you can see that the market was dropping, started dropping after that.
Mm-hmm.
You can see that,
Right.
right? So
Right.
this is kind of like the trigger for me to go short from there onwards. Okay. So that's
Okay.
kind of like my strategy. I trade based on this, and I go to the 5 minutes and I consider the entry, and my stop loss is something like $2,000 inside the funded form, and my target is something like the amount which is required to clear the account as well. And overall, no matter what, by the end of the day, I close the trade. Whether it's
Okay.
whether it's in a loss or in a profit, I close the trade, and because that tomorrow you'll always have a new trade, right? Tomorrow your
Right.
bias can change, so I don't want to hold the
Mm-hmm.
trade overnight, since gold moves pretty well in Asia nowadays. So because of that, I don't want to trade
Right.
the trade and hold the trade overnight, so I just exit at night no matter what. Either it's
Okay.
TP or I exit. Yeah.
So do you plan the target as well? Because you said like you will risk 2% or $2,000 based on 100K
Yeah.
account. So in
Yes.
this case, what is your target? Will you keep it running for like $8,000, or is this something like
um
1:2, 1:3?
no, like when it before getting funded, my percentage, the percentage that I'm risking is like 3%, almost like $2,900. Okay,
Okay.
because I don't want to spend a lot
Mm-hmm.
of time trading the funded account. Okay, either I win it
Mm-hmm.
and make some money from it, or I just lose it,
Mm-hmm.
because I have my life as well, right? So I can't just
Right.
wait like 2 to 3 months to get to clear phase one, to clear phase two, and to get funded. So I
Okay.
basically go for like three trades. Okay, by
Mm-hmm.
risking like 3%, almost like 3% of the capital. And by risking 3%, if you win the first trade, which is like a 1:2.5 hour, right? You only need that money.
Okay.
Like 1 is to 1.5, I guess. You're risking $3,000 and you're getting 6,000. So it's like 1 is to 1.8. So that's kind of easy to get in this market. Okay.
Mhm.
Which means your stop loss is something like $23 inside gold, and your target is something like 40 $50 to the downside. $40, I guess.
Okay.
40
Okay.
$50, something like that. So if you get that $50 download moment, you're gonna clear phase one in one trade. Okay. So I'm
Absolutely.
not gonna. I don't literally go for like 8%, but initially I go for like 6%, and then after that, because there is a rule in fibers, right? Because you have to make a minimum profit percentage of 0.5%, right?
Yeah. Three
So
profitable
because of that,
days.
exactly, three profitable trades, with with
Hmm.
with like 0.5%. So because of that, I limit it. I limit it so that I can achieve that as well. So yeah. So that's how
Okay.
I
Okay.
trade before getting funded, and after getting funded, it's $2,000 a trade, and so that I can just take 5 trades, and yeah, either I win it or I lose the account. It's absolutely fine. So that's what I do.
Okay, so the key part for your strategy is that you are looking into news like
Exactly,
precisely. So
exactly.
so let's say I can see that you have taken entry based on 1 hour time frame and then pushing
Uh-huh.
down to 15-minute time frame. Let's say there
Uh-huh.
is a news, let's say CPI is there. So how do you manage that trade? Do you cancel
So
out
if
it or do you let it run for the news?
it totally depends on the impact that the news can give us, because right now there is war. So war is the major news which happens in the market at the moment. So CPI,
Okay.
all the other news is don't really reflect or don't really affect the market that much, at the time
Okay.
of the news. Okay, you can see that,
Mm-hmm.
like back in like last year, and before this war news, you can see that the market was moving like 100 $200 in one news, 50 $60. But nowadays you cannot
Right.
see that because there is a major news, which is the war. So, and Trump comes in,
Right.
says things, and the market's going to move ahead, based on what he
Mm-hmm.
says as well. So because of that, these newses, the CPI, all the other newses, have like a smaller impact. The impact is kind of low when compared to the previous years. So because of that, I hold it, because I know that like no
Okay.
matter what, I have the risk. 2% is there. So if the news goes in my direction, then I will be
Mm-hmm.
getting money. I'll be getting that money. And if the news goes against me, then it's absolutely fine. And the other thing is like I mostly try to avoid taking trades in the news. I try to take trades way before the news, like 6 to 7 hours,
Okay.
based on the bias that I have, based on the
Right.
expectation that I have. Like okay, this news can be bullish or this news can be bearish. Okay,
Mm-hmm.
yeah, that's what I
Okay,
do.
so what is your take on like win rate and win size, like
It's
risk reward ratio and win rate?
ris- so the risk reward, just for funded firms, I basically focus on, after getting funded, if it's the first trade, I try to make $5,000. I try to make 5% of the capital by risking like 2%. Okay.
So can we also check
Okay.
the dashboard that you have traded on
Sure,
Fiverr's,
sure,
the
sure,
stats?
sure. So this is the live account. Can you see this?
Yeah, yeah,
So
this is live
after
account.
getting
Okay.
funded, yeah, after getting funded, you can see that the first trade was a win, because like
Mm-hmm.
had to close this trade at night. You can see that 11:33. I think this is IST, I guess. So at 11:33, I told you that like I don't want to hold the trade overnight. So whether it's a profit or a loss, I exit it. And that was it.
Okay.
This was the first trade, and the risk was like $2,000, I guess. And the second trade,
Mm-hmm.
you can see that I was a loss. It was a loss, 2% loss. Okay, let it be. It's
Mm-hmm.
absolutely fine. 2%. That's it. Let me just go for another trade. And this was the main winning trade. You know that, right? The 4K
Mm-hmm.
payout that I took. So okay, I got the 4K. Let me just secure that money. Let me just secure the payout. And after that, let me just try to take smaller entries. And this $10 was just me testing the spread. That's it. Okay,
Okay.
like
Okay.
0.01. So that's it. And then after that, you can see that like I have been getting losses, constant losses, because it's because like I took the trade based on the bias that I have, but my stop loss is kind of too tight, like based because of the risk, right? I told you that, as you can see over here, my lot size is pretty much constant, 1.28. You can
Mm-hmm.
see that, right?
Mm-hmm.
So that's a lot that I prefer, and the profit target that the stop loss that I set is like $2,000. So mostly the market moves in my direction after triggering the stop
Okay.
loss. That's the problem. So after triggering the stop
Okay.
loss, it moves. Plus, like it's sideways market because of the
Mm-hmm.
indecision is there. So even if I create the bias, there is a higher chance for the market to go against me since it's confusion because of the news. Okay,
Right.
and you can see that as well. So yeah, I was losing, or winning, losing. So the past 3 days I was losing. So right now I'm just
Mm-hmm.
holding myself. I'm just holding it because I can only take one more trade, right? So you can see that my
Okay.
capital is something like how much am I? 93,000. something like that. It's something like 93,000 at the moment. Okay.
Yeah, yeah. Closing
Yeah.
profit,
Yeah, exactly.
closing
93.
balance.
Okay, exactly. 92 300. That's the account that I have at the moment. So, I can't risk more. So if I lose this account, it's done. I have to purchase another one, right? So because of that,
So
I'm
like
just
at this
holding
point of
myself. Yeah. Mhm.
yeah, so at this point of time, where your account has a very small buffer, do you plan to shift your lot size, maybe to half, maybe 0.5, maybe 0.6,
It
or will
totally
you let
depends.
it?
No, it
Okay.
totally depends. It totally depends on the news as well as the impact that it can create. So I'm right now waiting for the
Mhm.
news, the current news. Okay, like say for example, today we have the I think services PMI is happening today. I guess. Like let me just check it. Services PMI is happening there today. This is like as well as ADP unemployment changes also there. So these two, I'm
Mhm.
just gonna check based on this news. I'll just consider taking an entry. Plus tomorrow, as tomorrow is also tomorrow, we don't have any news, but I do check unemployment rate as well. Unemployment change, I guess. Wait, that's Thursday, right? Unemployment claims, yeah, this one, yeah, to 14. So unemployment's going up means the Fed can cut rates because they
Mhm.
don't want the job market to go haywire. So I constantly check this as well. Plus the NFP as well. So I want these three newses to be, constructed in a way which aligns with my bias. Okay, I want these three newses
Okay.
to happen in the way that aligns with my bias. So I'm just waiting for that to happen. So right now, like my bias was correct, even though like I predicted the actual direction because I knew that the
Mhm.
ISM is going to be bullish and the market's going to go down. It was dropping down, but you can see that it didn't drop by a big margin. You can see that, right?
Mhm.
Monday, Tuesday, it went
Right.
up. So it's still confusion. Like it's going sideways at the moment. So I want to see it moving up, or I want to get that direction. Okay, and the
Okay.
main movement is currently happening. So the after opening, the weekly candle is it's dropping. It's so far hasn't shown you the upside wick. Sometimes it does show the upside wick, and we don't have that upside wick at the moment. So I'm just
Mhm.
still holding myself. This can move up
Mhm.
as well. Yeah, I feel like we can, if it moves up, then we will definitely reach 4,900, I guess. So yeah,
Okay.
so I'm just waiting for that direction to happen to consider an entry.
So since like you are using a higher time frame, weekly and daily
Mm-hmm.
time frame for your bias. So how
Mm-hmm.
is your trading routine for the week? Like, are you planning for a multiple accounts to trade in, or you
One,
focus on the
one.
single accounts? Okay,
Single,
just
because you
single
know
account.
that exactly, because like trading involves a lot of emotion, and like you
Mm-hmm.
can't just be literally be in front of the charts 24/7 because that's going to get you depressed.
Absolutely.
Because I was depressed
Yeah.
as well. Like I had the trading
Mm-hmm.
addiction back then because I was taking like 2 to 3 entries, and that's how I told you that I lost a huge lot of money as well right back then. So because of
Mm-hmm.
that, I focus on one trade, one account. If I win that trade, it's good. If I lose it, it's okay. I still have trade meme tokens as well. You can say that because that's where I like go for like smaller trades just to get the pocket money. You can say that. Meme trading, right? Meme coins.
Yeah.
There is a whole
Yeah. Yeah.
industry around it. So yeah, so I focus on that industry as well. So yes,
So it's like if you have a single account, you're gonna focus on that, and if
hmm
that's breaches, then you move to different accounts, not focusing on stacking and all.
stacking like multiple accounts at a time.
Yeah, yeah.
It's too bad. Like it's like that's gonna play with your psychology a lot. I don't want to
Hmm.
get that kind of a stress in my mind. That's the thing because like I told you, I trade meme tokens as well, and that's giving me
Hmm.
more stress than all the other markets combined. Because either you win some money or you lose it. So I'm playing with one Solana. So that's
Yeah,
about
the volatility is very high on meme
exactly.
tokens.
Exactly.
Yeah.
So in meme tokens, like I trade with like one Solana and I try to catch like
Hmm.
a 50% move. And inside the meme industry, a 50% move is like it can literally happen within seconds, 10 seconds. That's it. So I do that as well. So yes. So that's giving me more stress. So I don't want to take more stress. So like yes,
Okay.
this is kind of giving me a constant money, constant amount. So that's good. Funded form. Yeah. If I win a funded form, then it's giving me a constant amount. Otherwise, it's not there. It's just crypto.
So, do you have any advice for the beginner traders who are looking into this trading industry? Should they start with a broker or should they come to this platform space?
So firstly, they need to learn about trading. They need to learn about trading. They need to test, all the strategies that they have in demo accounts. And after that,
Right.
funded form is one of the best things. You can say that. Like it's
Okay.
going to build you that, it's going to build that risk management in you, because there are certain rules that you need to follow inside the funded account. And just because of those rules, and if you're taking, like, if you're focusing on one account, it's going to build you that discipline, and that's going to, later make you a profitable trader, I can assure that. But that consistency is what a lot of people lack as well, because like they
Yeah.
try to, they want that, they want fast money, they want this money fast, they want to get
Mhm.
rich faster. So it's not a, trading is not a get rich quick scheme, you cannot do that. And a lot of people are
Right.
do that thing as well, but they're just gambling, they have the money to lose as well. But I come from India as well, right? So over here, per capita income is too low. Even like we can't lose that much money. Like one funded account cost is
Right.
like 10K, $250. You know that, right? $250 or
Mhm.
$580. So it's required. And the average salary, of Indians over here is like 30K a month, 30 40K a month. That's it. So which means you have
Mhm.
to, spend the monthly salary that you're getting on a funded account, and
Right.
that's like at the moment it's not good. So learn it and then go for the strategies. Go for the strategies. Go for the
Right.
funded form. It's going to build that discipline. It's going to make you a better trader. Yeah.
So, is there any two biggest mistake that beginner traders make that loses a lot of money and time that they are spending on trading? Any two biggest
Gambling,
mistakes?
trading gold. You can say that.
Okay, gold trading
That's
is a
certain because
mistake.
no, no, not, it's
Okay.
not like that, because like
So,
people
what is the
like gold.
alternative?
Gold is volatile.
So, what is the alternative for that? What should they trade in the beginning?
Currencies, the best thing to do.
Okay.
Currencies, right? Currencies, master it,
Mm-hmm.
master the movement, learn what a currency is, learn what gives it the demand, learn why it moves up, learn about the fundamentals of a currency, and then later move to gold, because gold is more volatile. And if you're not focusing on a funded account, and if you're going for the actual account, there is a higher possibility for you to lose that amount, in the if you're not in a funded account, because like
Absolutely.
gold gives that, that vibe, like you can literally make $100 in, from a $1 movement. So gold gives that vibe,
Right.
and people go for like higher risk trades. That's one
Mm-hmm.
thing. And the second thing that a lot of people the second mistake that a lot of people make is, they risk a lot of money. Like instead of risking 1 or 2% of the overall account, they go for like 20%, 30% risk.
Right.
That's the thing. Plus there are like a lot of signal groups as well, so they just tell them to take that lot. They just signal, they just give the signal like, okay, go for like one lot. And people don't even know what one lot is, how much they're buying. They don't even
Yeah,
know
it's
one
too
lot
much
is
for them
100
to remember.
ounce, they don't know that. So people just go for like, it's just one lot, let me just go for it. But they're just buying, think about it, they're just buying $450,000 worth of gold, 100 ounce. So they don't know that, so they don't learn about the industry first. That's the main thing. Yeah.
So I hope the traders who are watching this video, they have learned a lot of things from you, Jagan. So thank you for
Yeah.
joining this interview with us.
Yes.
Wishing you a lot of success in the future.
Thank
Thank
you.
you so much
Thank
for
you.
this podcast. Have a good day. Bye
Thank you.
bye.
Have a good day, you too. Bye.